This is Alan Farley from FX Empire. Let's take a look at this week's top stocks, crypto, and ETFs to watch. First up is Disney, which reports earnings on Wednesday night. Taking a look back, the stock topped out in 2015. It broke out in 2019, came back up to near that high in November 2019 when the Disney Plus service was released. The stock topped out just a few weeks later, right up around the 150 level. Failed to break out during the pandemic, came back up to that level in November and broke out once again, going up to an all-time high just above 200 in March. Now, taking a look since that time, we have a very well-defined five-wave Elliott decline, a 1, 2, 3, 4, and 5. We're probably getting very close to a tradable low. We've just filled this gap right here, which is a big deal. And the stock has given up all gains posted since Disney Plus was released in November of 2019. Now, this is a pretty good level, but cycles aren't really lining up yet. As you can see, we still have a weekly sell cycle to deal with, and the monthly cycle is trying to pull into a buy from the oversold. I think the prognosis is kind of good, but we still don't have any buy signals, and it's a very dangerous stock to buy, especially you can see with this very gap and go action that we've had here, and price action around and below the 50-day moving average has been very poor all the way back since March of 2021. So there's really no hurry to buy the stock at this time. Next up is Twitter, and Twitter reports earnings this week as well, and Twitter's had a hard time as well. Twitter came back up to the 2019 high up here in the 40s in 2020 and broke out in October, coming up 280, which was just about an all-time high, but it's not that much of an all-time high. Because if you take a look back, you can see that the stock was up in the 70s all the way back in 2013. So it mounted this level and then failed to break out, which isn't really a good thing. Now here on the weekly chart, you can see we have this big correction right here. And this correction now has reached a 786 retracement of this big rally wave. That's good news. It's reached a bunch of other support levels here as well, so that's good news. So once again, it looks like we're trying to pull into a new buy cycle here, but patience is required while Twitter gets its act together. Next up is the 30-year bond. Now, the 30-year bond, this is a bit of a problem. As you can see, the 30-year bond came down to this multi-month low. How far low this was? It's July 2019. So this is almost a 2-year low, 1.5-year low in March 2021. Came back up over 150, formed this trend line of rising lows, and then broke that trend line in January, and now it's just taken out that low and dropped to the lowest low since let's hear about June of 2021. Now, this is directly correlating with, inversely correlating with interest rates. So interest rates on the 30-year have shot higher. On the 10-year, they've shot higher. And pretty soon, it looks like TLT is going to be testing the March 2021 low, and that could equate into even stronger inflation numbers than we've seen up to this point. Now, let's take a look at Bitcoin. Bitcoin is finally under a recovery move. Take a look at the daily. You can see that right here, Bitcoin has popped up to the 41,000 level, and it's testing the 50-day moving average. Now, it broke that level. It broke the 50-day in November, tested it all the way into the end of the month, and then sold off. Tested it again December, sold off. Now it's coming back up here. Now we're starting to get a little bit of positive long-term action. As you can see, the weekly has just flipped into a buy cycle. So I think we could get up to the 44,000, 45,000 level, but there's an awful lot of resistance right in here. And if you take a look back at the monthly chart, we're still in a very active sell cycle. So it's important to lower your expectations. Just take a look at this big trading range, which I think you're still going to be looking at it in 2023. Finally, take a look at Wynn Resorts. Wynn Resorts reports earnings this week, and Wynn has struggled because of the pandemic. As you can see, it really topped out all the way back in 2014, lower high here in December 2019, came back up in March 2021, a lower high here. So it's been tough going for this guy. Las Vegas operations are slowly returning to pre-pandemic levels, but Macau is still getting battered because the Chinese government's played all kinds of games with it. However, there's some good news on the horizon. The government has just issued new guidelines for license renewal. That's coming up in June, and I think when getting a new license, especially considering relations between China and the United States at this point, could really improve sentiment, maybe get the stock back above the 200-day moving average, which it broke right here in July of 2021.